Well, we are on this other side of the studio, and in studio with me is Abel Munda, who is the CEO of Liberty Life Assurance. And as I had told you earlier on, we'll speak about saving for retirement and also a bit on life insurance. Thank you for coming to our studios.
Thank you, Carol.
Maybe you can just share with us a little bit, like 30 seconds or so, about Liberty Life Assurance.
Yeah, Carol, Liberty Life Assurance is a premier life insurance company in this part of the world. We've been operating in Kenya for the last 54 years, offering retirement solutions and life insurance solutions as well to the Kenyan public. We operate with over 9 branches throughout the country. Our headquarters is in Nairobi, opposite the Serena Hotel. And we have over 150 members of staff, and also do distribute our products through a network of over 450 agents.
Great. Now, tell us, we'll talk about now the penetration of life insurance, which is at 1.3%, which is very low when compared to other countries which are more developed. Why is this the case?
Okay, Carol, there are a number of reasons. Yes, you are right. We are at about 1% in terms of life. And we have actually come from very far. We know that as a country, we have certain cultural practices. Life insurance essentially is a cover that pays your beneficiaries when something should happen to you. We know that in this country, we have, of course, the culture of Harambes, the extended family network, so that when somebody should pass on, and then, you know, the family comes together to take care of your kids and take care of your other responsibilities in life. But what we are seeing happening is that with modernity, things are changing. Those cultural practices are breaking down, the networks that we have are breaking down, and so we are finding that people are not coming as much to the aid of somebody's children if they pass on. And this is essentially why life insurance is very important as we go ahead. These cultural practices are breaking down. We know people call for Harambes, but people get tired of those things as well. So I think as we go forward, it is very important for people to save and for people to buy life so that when they pass on, their children can still go to school. At Liberty Life, we have excellent products that cover education, that cover your life. Or if you just want savings product that also can mature when you are still living, and therefore you get to enjoy the benefits of the cover when you are still around, those are also available. Okay,
talking about savings and especially the retirement savings, it's on a low uptake. And we have seen that even though we have been on a steady rise from maybe, let's say, like 50 billion shillings in 2000 to 1 trillion shillings last year. But despite that, only 15% of the labor force are saving.
Yeah, it is very true. And it is actually quite critical that you save for your retirement, and you have to start from the word go. The moment you start working, you need to start saving. It's never too late, because to accumulate enough money such that at retirement you are able to get enough funds to sustain your standard of living, it's quite critical that you start early. We have seen, particularly as more people get into employment, there are more schemes, saving schemes that are set up. And so there are a lot of people coming in. The growth is gradual. It is not where we want it to be. And so for us, we've come up with some very good retirement products. At Liberty, we recently launched a product called Boresha Maisha, which is a retirement product that allows you as the retiree or as the worker to choose amongst the various investment vehicles which one you want. We have reached a point where many Kenyans actually know what sort of investment vehicle they want to put their money in. And of course, we would advise you which one we feel is appropriate for you based on your risk appetite, so that you take up that. We've seen this product being taken up quite well, and it actually shows that the appetite for the savings products and for the retirement solutions is actually going up amongst Kenyans. I think with the increased urbanization, and we are urbanizing so fast, it is mentioned that it is reckoned that by the year 2020, actually over 30% of Kenyans will be in urban areas. Right now it's about 22%. So the growth is actually very fast. By the year 2050, over 50% of us will be living in towns. And with urbanization and modernity comes individualism. You know, I'm sorry to say that, but that is where we are headed. So with individualism, one needs to take care of their retirement plan. Okay,
but don't you see a potential crisis when it comes to like the saving plan of the saving percentage of 15%, knowing very well that Kenya is among the countries that has been declared as high oil dependency?
Yes, actually we need to grow that percentage, and it's very true. I know the government is doing its part through NSSF Act, and we know, of course, there is the new act that will be coming to being, hopefully sometimes in the near future, will increase the amount of savings and will bring a lot more people into the umbrella of savings, which is quite critical, and we should see that percentage actually go up. It is also important for us as insurance companies that offer retirement solutions to go out there and market these products and inform Kenyans. And one of the things we are doing as Liberty Life through our financial literacy program is to go around the country through our branches, through our agents, through our employees, just talking to Kenyans about the need to save for retirements, so that when they actually grow old and they retire, they should not depend on their children. You know, there has been this tradition whereby you depend on your children. Well, your children now are actually going to ask you, daddy or mommy, but you are working. Why do I have to give you money every month? You see, yes. So we must learn to be self-reliant in retirement. And I think it's important that we impart this knowledge to the general public. And at Liberty Life, that is what we are doing.
Okay. Now, how are you targeting the youth, especially when it comes to saving? Because we have seen youth do not save at all, and if they save, it's very little.
Actually, Carol, it's a serious problem. What we are doing at Liberty Life is to target the youth through the right media. We know that the youth very much rely on social media, so we are on social media. Again, we must have the right products, so we have come up with a product for the youth. The youth really want short-term products. They don't want very long. You know, if you are going to sell a youth a 20-year program, actually, you'll have a challenge. So they're looking at programs that are very short-term, which can mature and enable them to buy something, or save for, you know, the down payment of a house and such like things. And those products we have, but most importantly, is the channel through which you are going to distribute. It's also the media through which you are reaching the youth, because the traditional media, I have to say that I don't think the youth are very much in that space. So when you look at the social media, the digital media, I think this is where we can reach the youth. And we are equally reaching to them with education. We are educating them about the need for them to start saving for retirement. They are not very loyal to any particular job, so they jump from place to place. But still, like with the products we have at Liberty Life, no matter whether you jump from place to place, it doesn't matter. You will still be covered, and you will still have your retirement, you know, savings plan going.
Okay,
you know,
so is that one of the way you are enrolling the youth to be saving and also to increase the uptake of the pension scheme in Kenya?
Yes, we are doing it through that. Incidentally, by the way, you also need to advise people on this solution. So sometimes there is need for face-to-face discussions, but what we want to come up with now, Carol, is a situation whereby somebody can actually take up a solution without any manual intervention, without any interaction, you know, any human interaction, because it shall be very well explained on the media. You can click what you want. There are options for you to ask questions if you want, and I think this should be very amenable to the youth, you know, going forward. So if I can just repeat, it is a question of the media that you use, is the channel through which you distribute, and it is the nature of the product that you have. So you must have a product that talks to the youth, and that we have, and we are continuing to innovate. We are currently carrying out research to find out again what the youth would prefer, in addition to what we already have. So we expect that soon, in the near future, we should be able to introduce other products that will be appealing to the youth. Okay.
Because time is not on our side, maybe you can tell us how you're leveraging on the NSSF to ensure that you target especially the SMEs in the country, which account for 60% of the GDP.
Carol, that is quite important for us. We realize that a lot of SMEs, majority of the SMEs actually don't offer you know, retirement solutions in addition to the mandatory one that they deduct every month, 200, 400, and they take to the NSSF. So we are looking at helping them to save some more, set up proper schemes. So with the impending NSSF Act, when it comes into operation, will actually open up retirement space quite a bit, and allow the SMEs to save for their, because it's really not proper that somebody comes and works for you for a long time, and when they go home, maybe you send them home with a bicycle or a wheelbarrow or whatever. These people need a proper retirement plan. They need a proper retirement funding so that in their retirement days, they can still enjoy the same level, the same standard of living that they were used to when they were working. And we find SMEs have not been playing in this space. They have not been providing adequate funds for retirement. So we welcome the NSSF Act. We think it will open up that space. And they have 2 tiers. So the first tier obviously will go to the NSSF, but then there is a second tier where insurance companies can provide solutions.
Yeah,
we can provide cover.
Yes, I wish we had so much time to talk about that, but we'll, of course, allocate you more time next time. Thank you very much for joining us and for coming to our studios.
Thank you, Carol.
Now, that has been Abel Munda, who is the CEO of Life Assurance, that is Liberty Life Assurance. Now,